What's up? What's up? What's up? Good morning. Papa Bear's back in the saddle. Let's go. We can get the sell-off today. Getting the sell-off this week. Volatility's back. Monthly maps telling the tale. We know it.
The market's really been. I was listening to Bloomberg this morning, and they were talking.
Hopefully we stabilize. I don't like what I see. Volatility's imminent. What up, everyone? What up?
Hey, brother.
Yeah, Vixen can tango, and also be very careful today because, like,
Circle back.
Vix got that triple B today. Probably going to be an interaction point, so you be very careful. Probably one more day of rallying, up or down.
Evan, are you free to share some thoughts here now? No worries if not. I saw you message me. I know you might need a few. It's all good. Casey, I know you mentioned a couple long setups before when we were talking. You want to cover those once more? Anything else you're watching here?
Yeah, so yesterday morning pre-market, the big thing I was watching was QQQ on the 4-hour time frame. So QQQ on the 4-hour time frame, I had a big demand zone between 353 and 351, and QQQ was holding that position.
What up? What up? What up? Smash that like button, friends. Let's get ready to go.
So
Flat day, December. Yeah, I mean, it's very possible, right? We need to keep eye on VIX is going to be front and center. Remember,
I see a head and shoulders.
I mean, the most important things that we do is watch the VIX now. We got triple B on the horizon, so.
I was looking for a push back up on QQQ to 360 to 362 to possibly get a rejection up there and then fill out this right shoulder. So
Oh, yeah.
starting yesterday morning, I was short-term bullish, but I was kind of long-term bearish with this potential head and shoulders playing out on the larger time frame. So I was in Microsoft and Google calls yesterday with the relative strength that I saw, and I'm still liking these two as of right now for just a little bit more upside. QQQ almost hit 360 yesterday. I believe it hit like
Overnight, 42.65 was lower dynamic hedge pressure, so we'll talk about that from the bots today. So made a post last night. So this is the overnight. 42.61 monthly hedge pressure, 42.56 hedge pressure low. So 61 to 56. You can see that we're bumping right up into that overnight monthly. You know, that was the resistance point I was looking for today. So we're not getting a lot of pressure to push through it, at least in the overnight, which means equity markets around the globe aren't really picking up a lot of strength and momentum.
Perfect. Thank you, Casey. What's going on, Blake?
I do feel like today might be a short setup kind of day, even though we are trading up about 15, 16 points at the open. I'm going to be looking for resilience to come out to be not as strong if I can. Again, I'm not looking to force a short because I know volatility is coming. If the short setup is there, I'll take it. But I like the short against hedge pressures on the north side. I mean, from the south side if I hit them. What do you guys think? Tier T-bill auction stand tomorrow. Yeah, I think around noon we'll start getting our catalysts again on those things.
You know what? I love when these blockchain stocks get going, because when they get going, they can. I mean, we're talking they could rally 50% in a day or two. And not only that, but being an option seller, they
Our marketplace site is now up and running on the test servers,
Anybody else looking to trade these names?
at least visually. Functionally, we're still putting in different functions to it, but
I was gonna say, like, I love trading them for day trades. That's something I'm looking at.
I'm excited.
Especially if we can get some rockets here to get an idea.
Is that meaningful? They're all the same. It just came out to be that they're all the same. I wouldn't say I give it any additional meaning other than it's going to be cut and dry with all of them at the same spot.
Selling them off a big move like this, I think, you know, it's gonna cool off eventually. But you can
But
ride the wave, cash in.
because the estimates are built off of a range model, I'm just trying to estimate what the OI would be overnight before it's printed. You have a high and low value. The high and low value are the same. It just means that the model converged very accurately. So it's probably that's exactly what the number should be. Normally, it calculates a high and low estimate. If they're right on top of each other, then it means that the model is very predictable. That there wasn't a lot of change in the landscape to create variety in the output. So it means that's your point. That's a cut and dry spot. No flexibility there. What a great...
If you consider, well, I guess SQ is a crypto name. That's the only one I'm kind of...
Yeah, crypto running now on hopes of like a new ETF coming out or something.
Oh, okay. I mean, I've seen people say it. That's why I kind of brought it up.
Listen, crypto's dead.
Yeah, that's
Absolutely dead.
the only name.
I wouldn't invest in crypto. I'd ride the momentum waves and trade it if I wanted to, but I still wouldn't even do that. There's no utility for crypto yet.
Yeah, that square.
I think it's just finding residual waves of short squeezing off of the big short that they had last year. I don't know, what do you guys think about crypto? Just my opinion, so it is what it is. Crypto is just not gonna be the investment to be in for decades for sure. It just doesn't have that utility that it needs to have.
Swing trade. I'm looking at it. It's just we have earnings looming. I think it has earnings on the second.
Momentum trade, yeah.
Thursday. Speaking from a swing
Like
trade perspective.
you need widespread utility.
Swing trading, but
My thought is very simple. As an investor, I come up with kind of brilliant ideas sometimes, and they're usually simple. You think about it like this, right?
More of like a technical trader. I'm watching like
Like I knew oil was going to crash, 7-8 years ago when the shale industry was booming, and the street I lived in Houston was one of the most popular streets for like young singles to live on, which is like going to be, young oil and gas employees. They built tons and tons and tons of apartments and high rises and mid rises, and they're 80-90% vacant in the middle of the shale boom. And they're expecting to build like 70,000-80,000 jobs flood to Houston in a 2-year period, and yet nobody is filling up apartments. And your brain goes, well, shit. You can start looking around, all these shale companies are going bust, and you're like, oh man, this bubble's gonna pop, right? Crypto, here's the easy genius solution. Right now, if you have a grandmother who's still alive, she probably uses the internet, has a cell phone, and probably comments on your Facebook. See, that's why Facebook and other tech stocks are at the top. And as soon as your grandma can buy a loaf of bread from Kroger, fucking Bitcoin, then that's when Bitcoin will be on top too. That's literally how sentiment works. And when it comes to money, there's a little added caveat. And when you can pay your taxes with crypto, then it has utility, which means everybody's going to be forced to use it, right? Or everybody be able to use it for things that are required. And so until either one of those things are happening, it's not a mainstay investment, right? Think about it. Your grandmother is usually buying your Christmas gifts on Amazon. Your parents do the same thing. Amazon's at the top, right? I mean, it's like in 2000, the hope was there, and then everything crashed before it actually found its utility 10, 15 years later. And through the 2000s, when bank stocks were the top stocks out there, it took the actual high-speed internet and mass utility of internet for tech companies to make their way to the top where they belonged. Bitcoin is the same thing. it lacks utility and widespread use. It's an enthusiast thing. And while it does have hope, you're going to get tons of cycles. That shit's going to rally and crash and rally and crash, and one day it's going to crash. And if you care about the investment, you let it crash and get in and hold and forget about it for a decade. And that's the correct way to buy something that's possible game changer, but has no utility now. That will crash harder than anything else if anything else crashes. It's got no value yet. So,
And Minx might have a trade in those 6 to 10 seconds.
so if you're a Bitcoin enthusiast, it's not shit, it's rallying right now, let me get in on it. Think about it right now. It's not rallying on any utility, it's rallying on hope. And that's usually fueled by a short squeeze. Shorts are getting out of the way, they don't want to get squeezed. It's not bull sentiment and carry that to a massive rally. I've been trading long enough to be able to see those patterns all the time in anything you trade. Just be careful. And that's the way to trade with sentiment. If you can forecast widespread utility, like government regulation changes, like the IRS now accepts Bitcoin as a form of paying your taxes and things like that, that's where the rally starts and keeps going, right? Widespread utility, everyone needs to be using it for it to become the next big thing. Not, it looks good on paper. The internet looked good on paper, but you couldn't download anything quickly in '99. There's no high-speed internet. You had to tie up the phone lines. It was a nuisance. You'd rather write a Walmart to get something instead of order on Amazon. The distribution network wasn't there to make the internet the central hub for commerce. I mean, like, it takes time for technology to be there, and then that's when it's the mainstay, right? Even between then and now, you had 2 market crashes to buy the dip in. Microsoft and Amazon and Apple. I mean, literally markets collapsed twice in there. You will get an opportunity to buy the dip in Bitcoin when it's worthless. If you believe in it as an investment, wait till that shit's worthless. And everything else is crashing, and then be smart and plant some money. Forget about it. You have news today? Yeah, probably. What stocks am I long on? None. I'm not long any stocks right now.
Could be earnings, could be a particular earnings call, could be, I mean, who knows?
I don't.
But that is what we're seeing here from a price fundamental standpoint in the SPY. And some people could argue, well, that's just the SPY. It doesn't necessarily mean there's all.
Guess we're ready to get going here.
That's true and not true at the same time.
So Nasdaq has kind of double topped from yesterday's kind of end-of-day rally.
A stock like Disney's probably going to go up quickly unless there's some kind of
Or yesterday's middle-of-the-day rally, I guess.
which can happen. But with individual stocks,
But it's paying. Yeah, I'm flat. I've got no swings, no anything.
so yeah, we're expecting volatility.
After Fitch downgrade, I'm neutral market. I'm just day trading now. Once monthly map shattered, and Rocket Scooter shows you that when that monthly map shattered, just get out of the way. Like, monthly maps have just been disgustingly scary. This is bullish liquidation. This pattern right here where the bull side is creeping up like this is bad news. We haven't seen that since the inception of monthly maps. It's not that good. All right, here's the gap upper ready to get going. Resilience up in high 90s, which is great. Right. Market open, we're looking at a pretty high resilience in the 80s and 90s right now. It's showing a strong gap. I'll get liquidity maps come through and see what this market's going to look like. So I'll give it like 5 or 6 minutes to settle out before I try to do anything. Let's take a look at this. Res is great. Top of the box. Lots of green today. Yeah. All right, let's get these numbers coming through. So we got 30 seconds to get our calcs done. Like I said, upward targets we look for here. So I'm not going to try to force a short. We're looking anytime you trade, DD Bandit. We had the DD Bandit video yesterday, so for the end of the day. All right, we're getting these calculations come through. We're in that bullish long sort of scenario here. Here we have VIX down here. VIX has interaction point. Oh, they're okay. Oh, wow. Okay, good. So this is a really limited pattern right here because remember, VIX is going to have a bounce point here. That is exactly what I thought. Higher before lower. I think exactly what we get.
Regular hedge pressure, 422.5. Start of the bull zone is at 423. Bottom of the bear zone here is 422. So this is a recipe for a shot unless we get a catalyst to push it.
Oh, monthly maps kind of stabilized a little bit. Please tell me I'm not just seeing things.
Very, very interesting open here in my opinion.
I'm looking at the monthly map on SPY, and it's looking like it is trying to stabilize, which is good. This is great to see this mechanic here. So the volatility event might not be as bad as we thought. Qs are looking a little more stable as well. SPY's looking pretty stable. We do have bull long up setting in SPY on the daily, so basically we're looking for, you know, some upside movement, but we have volatility, which we watch every single day. UVXY's interaction point is 16.5, so any upside is going to be met with volatility bounce. So limited upside today, about 42.80 upside on S&P. I don't expect it to break down and go any further, but the volatility imminent risk that we saw yesterday looks like it's probably been squashed, at least for now, so that's good.
That's a great point. I'll tweet this out here in a second, guys, and we'll
Very good. Okay, so basically not going to be actionable here today. I'm going to let this ride higher, and I might take a look at this. I might want to take a specific. All right, so mean reversion, we know that DD being greater than half. Let's look at our rules here. So market's going to go up today, so thank God it's not going to die. If y'all want to see what I've done before, oops, this is my. Okay, so let me show you something pretty cool. I do these a lot. So using monthly maps, I've actually predicted very accurately many of the pivots. If you guys have never seen this before, feel free to subscribe to the stream really quick, because we do a lot of really awesome stuff here. So back in the day, when everybody post-COVID was saying market's going to crash, you know, we said the market looked like it was going to double over the next 3 to 4 years. So we're on our way there, for sure. And so, like here at the top, this first red candle, despite all the years of rallying and everybody's still being bearish and whatever, this is the first time I ever called a correction and said volatility is going to take over for the quarter. And the recession actually started. So it's sidelines would be a good idea starting now. Like I pulled out at the top, like nailed it. In the middle of the recession, everybody's calling for market crash right here. We called a 2-month bear market rally on using monthly maps again. So that continued to go for 2 months. Down here, we called a bottom for the year and then a rally through the summer. And that exactly happened too. Monthly maps pivoted the market to a fucking T for the last time. We've had it since last year. And so in our platform since last year. I used to manually calculate it back here. It's tedious. And so here, we had this idea, we had this visibility that the market was going to be bullish through September, October. And then when Fitch came out, we said it got shattered and it was done. So monthly maps is so accurate. It's showing you what's going to happen. These pivots in the market are visible from people's positions. And that scariness we had immediately yesterday got some anchor points in here. We're back to being bullish. This is great news. Great news. This is bull territory monthly map.
Just like Adam was talking about.
Great.
SPY opening, basically.
Great news.
And also for hedge pressure, so something to keep on watching.
Everybody see that? Everybody here, y'all understand what I'm saying, right? Stable for now. Stable for now. So we just had that residual effect.
Take into effect, obviously, hedge pressure. I really see this more so as support and resistance and change of possible trend.
Volatility potential. Great news. Great news, right? So be careful, UVXY bounce point there, so QQQ. I'm not any trades right now. Limited upside right to DD band. That's what I don't like about days like this, is that that's my trade right to there. Yeah. This is a big thing that we talked about yesterday, and this was the first day of the trading month, so it could be an artifact of just people rolling in. But after yesterday's rally, people were very overconfident in this market, and they're stabilizing. So these bull supports are in, and that volatility event that we're worried about looks like it has, for now, stabilized them and crushed. There's enough liquidity, meaning that bulls are stepping back in here. So this could actually be the bottoming event that we said would probably come after volatility, that could have been the volatility we had. It could be over. So this is a really good sign for markets. A lot of times the markets shift themselves to being stable and bullish, and the monthly map has been very accurate at pivoting the high and the low. What we call the high at the top of the COVID rally, and we called the low at the bottom of the recession, and it's on my Twitter. And now we were saying this is a warning sign, and when Fitch happened, the downgrade, it shattered the bull market as well. Monthly map shows people's positions. It shows exactly what they're doing in the future. When positions expire and roll off, it's the purest vision of the market. And so when it shows risky signs, we're kind of like, okay, let's kind of hold back. But when it shows stability, it tends to lock in for the month. So this could be a good sign, really good sign. And it's one of our best tools that we do have for like greater sentiment and seeing where markets can pivot on a larger scale. Love it.
I just wanted to add, it's such a great research tool that you guys have, but also like if you're just have your ears and eyes into it, you know, Black Monday, everybody's calling for this crash, and the market did look bad. Not everybody. There's people. I don't think anyone up here was, but what I'm trying to say is how quickly the market can.
Oh yeah, the clickbait market's gonna crash.
And as Matt said, all of a sudden, you know, the advanced decline or the monthly map is showing a completely different picture, and that's why it's really important if you're trading.
So it's like looking at some stocks really quick. Balance on hedge first 171 and a quarter. Market's off looking good.
Different tools you're using like Rocket Scooter.
Appreciate the Kim. Adam, you want to do a lightning round before market starts moving?
I don't know if you want to wait till after 9:45 just because of that data, but it's up to you.
Well, I mean, it's good to do it before the markets move, so I can actually see if I get it right.
Okay, so guys, if you're interested in that, real quick, because I have to stand up. So if you guys want to drop some ticker names down in the comment on the space, we'll do a quick lightning round.
News in less than 10 minutes. Yeah, let's take a look really quick.
Prior to that, Ashley, you want to pop in here and then we'll do that?
Yeah, I want to add to a little bit what Kim was saying. So the market can absolutely pivot on a dime, and we all know this, and it has.
Yeah, let's wait till PMI.
According to what we're seeing. And the
That's
reason
true.
for that is just there's too many reasons, right? If big money.
Everyone smash that like button real quick. We're up 42% on the small account, just trickling by. I think I've only lost one day in the last couple of weeks. Pretty good. Microsoft bearish setup here as well, looking at this. All right. 332.5 of resistance on hedge pressure. Okay. So I think DD band probably be tapping pretty soon.
Or CNBC or whatever, and they say, yeah, we're watching this, but just because they say it on air, that does not mean that's exactly what they're watching. They could be doing a little sleight of hand kind of thing. So it's the market is so dynamic, and it never ceases to amaze me. I'll shut up.
No worries.
Appreciate you guys. Oh yeah, we do have services. PMI coming out in a little bit, right?
Well, that's why we have that data in 5 minutes.
When you said 9:45, I was like, oh man, that's an hour away. I keep forgetting.
The time zone that matters, man.
Everyone should use Central Time. It's just the best time zone. No offense to anyone else in you other three inferior time zones, but Central's the best.
Look, the stock market in Eastern, so there's a reason they put the stock market in Eastern. They knew what they were doing. So,
I don't want to hear it. Yeah, let's wait until after PMI then. Let's go ahead and we'll get some levels to come out.
Tesla going here.
All right, Iceman remains to go. What's up, Thomas? How you doing, man?
Tesla and Riot.
All right, I think we're just longing up to triple B now. We did open mean reversion, so we're likely to close mean reversion. I'm not gonna lie. If resilience starts to fade out, I'd be willing to take a tap off of now. We don't have a.
I saw someone swing Mara $10.
No, I'm not gonna force a short.
Overnight.
Opening mean reversion, so what limited volatility we'll have will probably keep us in this range as well. I think that if we hit here, I might be willing to take a short on just some quick scalp volatility from there. Short before numbers? Oh, come on, man. I'm gonna go all in on black, all in on red. This ain't roulette here.
Yeah, Blake texted me yesterday morning and said,
I know UMK. You've been getting these big volatile runs up here, so I think that today let's do a quick analysis really quick before this PMI comes out. So let me show you some numbers really quick. If y'all know how to use Rocket Scooter tools, let me show you. Resilience is our gap fill predictor. So inside of this redistribution zone, this box right here, you can see that a positive resilience, it's on my screen, is certainly greater than 0. We're going to flex through the box and off of the box is one of the readings from resilience. So that's check, and get these from Rock Scooter tool to show you that. DD ratio, bullish. It is certainly bullish. It's a 93, way greater than half. So anytime you are opening in the middle, it fluxes to the top. So the middle, which is where about right here, between these bull and bear zones, it's going to flex to the top on DD. And DD is there, res is there. Both those looking great. Liquidity map, bull long up, open blue open. This is this V shape right here, open blue open. Open blue open right here, boom boom. Any support on open goes to next resistance, which typically is going to be bull zone tap. So this is liquidity map right here. So they all point from here to there. This is the window of opportunity from here to there. If you made a scout from there to there, that's a great predictable trade. Anything else from here is random. So see all of our tools lined up right there out the door. Not really actionable. We've got DD band in the way, which is about right here. If I were to close here and take a runner, DD band is probably the upper limit for the day. As the market goes up, though, VIX is going to hit a pivot and pull back. So we're going to have the idea that the market will get somewhere up here and then turn its ugly head around. So the question is, what happens when that volatility creeps back in? I might just to have fun on the stream, I might take a quickie scalp short off the DD band up here, just because VIX is going to hit a level where it could bounce. So once this gets right about here, I'm sure that we're going to get here and probably trickle out and turn around. We don't have a rule that shorts off of a DE band, but I do like to not be long on the volatility. So why not just put like a couple micros on it and see what I get? Additionally, we're very close to triple B, which is here. On VIX, we have 1829. This is going to be a very key area. This is the contango effect that happens in futures contracts. This is always a bounce point. We have to be very careful. It's not going to be as bad as we thought. You know, we're kind of worried yesterday. Things are looking good. Do I hear AJ?
Hey, what's up, bro?
What's up, man? Good.
Yeah, I've been in and out traveling, so I'm trying to get back in 15 minutes.
Yeah, good time right here. Right before
What do you guys think? Take a vote, long or short. What y'all doing?
Probably a good time to take a little bit of profit because they are just pumping.
I wouldn't disagree.
I finally got out of my Mara position. Wolf, I had been holding shares for quite some time.
What do y'all think? Anyone else missing liquidity maps? Make sure you add it on your chart. You might have deleted the indicator. That's a thing that happens. You delete it on accident. Make sure after you add it, save your layout in the chart. Save your chart layout. It'll remember that you had the indicator on there. Long the DD, I don't disagree with that. Here we go. Here's the numbers. So what do we got?
And to see what happens right here during this data release. I'm not holding anything through data. Just actually looking for got a little downside right here. I'm looking for a bounce on SPX.
Came in above expectations.
Yep. It's like, I think in general the numbers came out pretty good. I mean, yeah, kind of right at par. Now the trend of the actual manufacturing PMI has been that it's been slightly improving since the beginning of the year. So creeping up above 50 again, it's not a terrible idea for the greater economy. I think that we've been talking about the recession mechanic is over. GDP growth and these PMIs are showing good. CPI is trickling up a little bit, but we're getting that soft landing the Fed keeps talking about. The economy is stabilizing, so these data points are pretty good. Just what you want to look for in the news is not to see like shining awesome news. You just want to see it not getting worse. With the market cycling the way it is, as long as the economy's not taking second or third downturn in bad economic data, then any news is going to be perceived as good news in the long haul, I think.
Man, I love when you unmute your mic and I typically hear what is it, Adele? But there's no singing, it's just like the piano version or your cat. Either one. It's delightful. It's more enjoyable.
I tend to like bring happiness everywhere I go. That's my goal in life. Dude, I listen to this like lo-fi, copyright free music on my stream, and it's like, yeah, I can hear Adele right now too. Y'all can hear that? It's like it's pop music mixed in lo-fi hip hop. It's super dope. I love it.
Good time right there, by the way, to take that profit. You can see some of the
Nice call, Goff. Nice call.
Just had a feeling they were a little overextended.
Sim, are you gonna buy the dip here? Is this a spot you're looking to get in on?
Just about. I was like 42.36-ish area.
Yeah.
But this looks pretty prime. I mean, bids are trying to hold, so we might see some upside here. Came in above expectations.
Should I long on hedge pressure? What do you guys think?
Some dip buying to start coming in. I was actually watching Netflix though.
Let's put some micros on it.
Like
Just
right
one.
Underneath 411, I was looking for a bounce, but it's holding strong.
Two.
Just sitting there.
Yeah, I just added to some more MES longs here.
Let's just put some micros on it. Why not? Why the hell not?
I was in before data.
Market's good for now, at least. At least they're good. Let's put some micros on it. Yeah, I took a couple long micro scalps. A very small trade. I might get 10, 15 points on this if I think, but just bought on hedge pressure SPY. If the volatility is crushing out, I think it'd be a pretty safe play to go in a little. But I'm playing with pennies.
You're seeing DD hold as well. You saw the bounce right off that.
Yeah, for the most part, it's 2-1, and I put a couple dollars on the. I'm playing the penny slots today, instead of the high rollers table. Yeah, tiny moves, and we'll see if I get anything. Hedge pressure bounce to maybe DD, but remember opening in mean reversion likes to stay in mean reversion, so I'm not getting too overly excited about this.
Good. Do you not take anything here?
No, I haven't yet.
I think so too. I think we'll get the play off of
35% profit on SQ there. But other than that, no, I haven't really done anything yet.
Let's see if we get something good here. Let's look at NQ really quick. Let's go ahead and load up for my watch list. And you guys, by the way, make sure you smash the like button on the stream and feel free to give us a subscribe here. We have a really cool thing coming out with our marketplace. We're gonna have one of the largest, if not the largest, trading marketplace on the planet. You'll be able to buy so many different things, different tools, different vendors, different services, all in one spot. Go here. You can check out Rocket Scooter for $19.99 for 1 month. It's the $199 package, the full unlock. You can try it for $20. You can go through our entire program. You can learn everything that we do.
Yeah, we came down right on to remind everyone.
Come through our boot camp.
2.5.
Let's check out NQs really quick. Okay, not rational. I mean, market is clean, despite what I was feeling earlier. Market does look somewhat clean. I'm not really hating it.
After that data came out, we're seeing res drop in Rocket Scooter, and it hasn't really turned around yet, so I would be a little cautious to the upside here unless that number starts ticking up personally. But now we're under 10 on both NQ and SP, which signifies to me that we could start to go lower here if we don't see some positive momentum come in.
Yep, and what we're saying with resilience is the integrity of the gap, right? So we gapped up in the S&P, or if we gap down the S&P, or NASDAQ, we have one for SP, NASDAQ, and Russell. And so that number being above zero just shows that the markets are fluxing to sustain that gap and go. And that's kind of what you're looking for. Is the gap going to fade, or is the gap going to keep going? And we create an indicator that helps see how it's tilting the scales, because it's an aggregate of all the stocks and what they're doing. What's up, Bastion? So we call it res or resilience, and it's one of our best tools we have.
Yeah, I'm being pretty picky on entries today. So since
I don't hate it. Res is at 20. I don't dislike it. Trade it to DD band? Why the hell not?
I like that. I think that's pretty bullish for the day.
Actually, you opened up in the mean zone, right underneath.
Oh, you're right.
Let's just go half position. Why not?
Like,
Whatever.
Just by a hair, I think. Just
But
by
you're
right.
You opened in the mean.
And then I could get squeezed out and lose a couple $100. No big deal.
Bounce off of the top of the bear zone, which is right at 422. But I am not overly eager to jump into a position because, as Matt and Adam alluded to just a little bit ago, if resilience begins to really crash below zero and goes negative, then that tells us that we could fill the gap to the downside, which is all the way down at 420.50 roughly. So just watching that accordingly, but I'm looking for a potential bounce off the top of the bear zone at 422 on the spot.
Yeah, I just don't like how you're right. The bear bull and the mean is all within $1. So probably because we got earnings around the corner, so it's everything just pushed.
Yeah, that's happened quite a bit over the past couple of weeks. Is that liquidity pocket is just $1 wide on the SPY, and then we can chop for majority of the day and within that $1 range. I don't see that happening today since we're in a relatively elevated VIX, but, you know, market's going to do what it wants to do.
Yeah, on that subject here, VIX is actually starting to pop off a little bit. It's a little concerning if you're a bull at the moment. I'm still sitting on my hands here. I haven't taken anything.
Yeah, VIX is just kind of floating in this area. It's not really. It's going up a little bit, but it's. I'd be more scared if we drop down to that hedge pressure pivot on UVXY 16.5, and then I'd be very nervous about being long. I kind of added to my long position here just a little bit. I mean, we're on hedge pressure. The risk and reward is really tight. I'll know if I'm wrong pretty quickly.
Talked about that SPY kind of chop area yesterday.
Matt's feeling saucy. Yeah, I know, right?
A couple cents below it, 422. Like
Adam said he's like, I like when I come in here and I hear you open your mic on Spaces, like, and I can hear
2 to 3 times here in the past.
he's like, I can usually hear Adele in the background, or I can hear your cats.
We could possibly see some upside again and a bounce.
Yeah. So by the way, I think I'm on like I don't know how many. I need to go back and check the broker statements. And one thing that we don't actually do in the
Hey, Matt, real quick, do you want to explain
in
to people
here
what it means when we're
is a show.
mean reversion here?
We don't have like a really like a report yet where we build like a report to show like what your stats are and stuff. We need to build that. Say it again, Adam. Sorry, I was in the middle of a
I was
sentence.
gonna
Yeah.
say, we're right now on we have a mean reversion on SPY right here, and we're sitting around hedge pressure. I was just asking if you could explain what that could mean.
Yeah, sure. So the way that the model works is it's looking for that line in the sand where bulls are definitively parked and bears are definitively parked against the house. If you think about way trading typically works these days, when you buy something, you immediately get filled. It's because there's a bank positioned on the other side of you immediately to fill you. Not necessarily always another trader. Now, the goal is to find another trader to be against you. But in the meantime, everyone's trading against the casino, and the casino takes a position against both sides, right? Because market makers are dealers. And so what happens is what our algorithm does, it digs through options and tries to find that line in the sand where we know it's bulls against the house and when there are bears against the house, and we call that bull zone and bear zone. So every stock that we have options for, we can draw a line in the sand. This is where it's bullish and this is where it's bearish. And what we call mean reversion or a liquidity pocket is when you're kind of in between bull zone and bear zone. You're neither. So there is no strong push or pull in either direction. The market's relatively balanced. So you have a case where the bulls aren't in the money yet and the bears aren't in the money yet. Everybody around the globe, whether you're long or short for the most part, as a net sum is losing to the house. It's that perfect spot where the casino is beating everybody. And so the incentive to rally or sell off the market pays off one side. You don't usually see that happen. We call them liquidity pockets or liquidity traps because what happens is you have two sides of a trade, longs and shorts both upside down to each other. Market makers don't have to do much. You have buyers and sellers in a close proximity. Volatility tends to collapse and the markets just kind of like hug the fort. They don't find a lot of momentum to go either direction. Case in point, we're kind of sitting here between 42 and 43 SPY and not really moving too far from it. It takes one side to liquidate really hard to push the market. So either bulls get out or bears get out of the way. And it causes the momentum. But left to its own, the casino keeps it in the middle and just bleeds theta every second you're sitting there as calls and puts it out of the money. So sellers of options love these areas and they press them towards the middle because it squeezes out anyone that bought puts and calls. And so mean reversions are just a giant fancy way of saying a balanced point in the market, and it's not really super actionable for any direction one way or the other. So as you can see SPY just kind of sitting still and sitting pretty and kind of just not really bouncing really high, bouncing real low because the lack of volatility that comes with the mean reversion.
Well, in all of this, the only positive sign is prices.
Oh yeah, baby, $115. There we go. Making that big money. Was everybody here yesterday? Did y'all all see photos from my birthday party? Did anybody not see that? You want me to show y'all again? I'm so happy. I had such a good birthday. I've had I've been spoiled the last 2 or 3 days. Everybody's just been so kind and so nice. Y'all been so nice and kind to me. Dude, we threw a killer ass party for my birthday. I'm impressed that I was looking good. Actually, he's dressing pretty nice. QQQ won't fully load. Yeah, we have data missing for QQQ, and I don't know. The walls are gone, and I don't know why that is.
And that's the Russell. yesterday
This
the
is good.
Russell looked like it was going to have a really nice bounce of a day, and then it just lost everything, and then the market followed suit. So the Russell's holding its water so far this morning. It's nice and green, gapped up, and it's hovering around the high today so far. So if the Russell can hold,
Let me see what the risk interval is on the S&P.
Nice little pump today. So, personally speaking, with my iron condor, my lower legs are getting
31.
tested, so I would appreciate a bounce here today. I wouldn't mind that.
My long's starting to make a little bit of traction. I upped my position a little bit. I only have 8 micros. I barely have one full contract on, so this.
More data here in 3 minutes.
Yeah, good call, good call.
So far, nice bounce off hedge pressure on SPY.
Yes, sir. Yes, sir.
Yeah, we're bounced off a hedge. Now we're trading back above VWAP for the day. Like I said, above another 5%.
More data coming through.
I'll get long again.
Manufacturing index auction.
Real quick to your point, Ash, and your canary in the coal mine.
I mean, I'm just kind of like goofing here. I mean, I'm not going to argue against a free $300. I'm just going to take profit and call it. I don't really like. Whatever. I should probably hold a runner till there, but I think I'm going to kind of like focus on this. There's new news coming out. It's not going to be a big catalyst, but I just still have like an iffy feeling about the market here. Ash, the only person who looks at the Russell? No, we look at the Russell as well. I just only look at the Russell whenever it's starting to show bad signs of things, but yeah.
But they're becoming less relevant for me because
I should just look at the data up here, but we have Russell up there. I only kind of keep this in front of because this is what I'm trading.
that means that any
Yeah, Russell's picking up. I probably should hold the DD band, but at the end of the day, I just,
in a good way.
I don't know.
Really all
The idea that we're opening a mean reversion and pressing the bull zone, I don't like being in a trade up here. So I'm just closing on a technical high. Whatever, it's $300 I didn't have. Jason says once big tech reports is when we have a silver certain confirmation.
Probably 60-70%, which is one of the beauties of selling options. You can roll them indefinitely and continue to get more premium and more premium. Take us a second. Such a beautiful thing.
I've got 12 more years. I'm gonna list down to 5 more situations.
All right, cool. Before we get too hot here, I mean, SPY might break this double top here, so we'll see. But we'll run into the lightning round now. So Matt, if you want to, well, people know what that is, I will get it set up and we'll get going.
Awesome. Yeah, awesome. So lightning round, now we waited until we had an event come out to be a little more accurate with this. So what lightning round is I'm demonstrating how quickly you can throw random stocks at me. So you guys go into the comments below or come in the stream and type some comments. Adam will read out some random stocks and not prepared for it, and I'll spit out a trade plan with risk and reward, probably 5 or 10 seconds per stock with some numbers. So if you guys want to jot down, take some notes. What I'm doing is I'm looking at the liquidity maps and trying to find bounce points and just kind of demonstrating that with a lot of practice, I can just thumb through charts super quick and just get a feel for, if I would act or if I wouldn't act, and then generally what I would do if I wanted to go into that trade. So I'm going to call out some really quick trade plans for a bunch of random stocks. And of course, it's not financial advice, so nobody go in there and throw your money at what some random dude on the internet tells you. That sounds stupid, so just hear it with a grain of salt.
All right, first one's going to be Roblox RBLX.
All right, Roblox. Okay, so I'm going to type it in, RBLX. We're going to see what we get.
Stop schedule.
By the way, I just took profit on my long trade, just letting everybody know that, because it's just, we're leaving that mean reversion zone, and it's just a good time to do that. Okay, so Roblox, give me 1 second. It's not loading up. Okay, Roblox, okay, here we go. Bull long up is a gap and go right at that 3120 level, and the hedge pressure at 30.5. Bull long up is great support. I think that with that being said, I would have longed Roblox out the door off of that open price. With the resilience being positive, all things gap up and trading up, be a good time to trade. And I'd probably trade to like the nearest gap fill if I could find one. But yeah, it seems to be a pretty decent trade. 30.5 support.
I'm on Roblox.
Google.
Google. Okay, 1 second. Google 138 support, hedge pressure break to the upside. That's looking really nice and squeezy. Now with the entire index, trading up and likely going to be hitting a DD band, I'd run that probably close to 139.5 or 140 area. I think it was about a 2-to-1 trade with the 1 point stop under 138. Belong up, 138 hedge pressure. AMD, hold on. Yeah, all the stocks are looking pretty decent today. Nothing's looking crazy. AMD is opening in mean reversion like the rest of the index we said this morning. So AMD is not necessarily actionable. There could be some volatility here. I don't really see anything I would do today on AMD, unfortunately. 103.5 is hedge pressure. That's 3% away. We're not going to get there today. I wouldn't do anything on AMD. I'd hold the forward. If I was actually long or short this, I would just buy options just in case volatility picks up. And I'd probably be more inclined to buy some put options just because the market was looking a little iffy the other day. But in general, I wouldn't do anything on AMD. I'd hold the fort. It's looking stable.
SoFi?
SoFi, all right. SoFi, let's go. SoFi is a bull short up against monthly hedge pressure at 7.5. Now, I don't traditionally trade low cap stocks, but any break of 7.5 with velocity, as it's made 2 attempts and failed, could be some long run on this. But I don't see it. Obviously, we opened outside of a bull zone, so I think that 7.5 is going to be resistance today if the S&P and others indices start pulling back. Obviously, it's mirroring them very well. It's very, very, very tight on this one. I'd be willing. I'd probably sit on this one as well. My brain's telling me I'd like to take a short off 7.5, but again, shorting penny stocks is always a terrible idea, so I wouldn't do anything here other than sit out. And like a defining break of 7.5 could be some long with a good stop. Tesla. Okay, hold on one second. Yeah, SoFi doesn't look super hot. Tesla's looking hot though. Tesla's looking great like everything else. And the first ones we talked about, bull long up, gap and go. Tesla looking strong. Half gap support, high resilience. 214.5. Or so 214.25 is a nice support there. Breaking above the open. Anytime a stock opens on a gap up and supports the open and goes higher, I always try to get in on that long to some level. I think Tesla's going to mirror what the index is doing, so it's probably going to trade to upper DD bands. I could say about 222, maybe the highest today. So I would have taken a long at the open. 210 hedge pressure support, great bounce to get in on, or just sell a put spread below 210 if you bet on the market just being flat and stable. Bet that it doesn't go down. Tesla's strongest of all the ones we looked at so far. Apple, all right. So tech's looking great. Tesla's looking great. Let me get Apple going on. Hold on, wait. Give me 1 second here. Apple drifting lower, hedge pressure, 171.25. Bull long up. Apple's all signs pointing up. So I would buy a bounce at that level on Apple at 171.25. So Apple actually gapped kind of flat and traded down a little bit. And just staring at it, it does look pretty solid for a good R&R trade on this. Again, day trading only. I probably only trade up to close, so about 171.25 to 173 with the 1 point stop below that is a decent scalp. And then when we get there, I'm going to have to look at the index to see if I do want to trade. Now, all of these ones that I was saying I might buy some dips on, if resilience flips negative, which it looks like it's doing, the entire index is going to fill its gap and go down. I probably wouldn't be buying any stocks when the index itself, I use a top-down approach. The index looks bad, I don't long the stocks, even if the stocks themselves looks bullish. So resilience is getting dangerously close to zero. We might actually start selling today. So
Yeah, I was going to say that resilience number is going off a cliff as you're talking.
yeah, and as that happens, if we do hit, the way I treat it is like if I hit hedge pressure 171.25, I look at resilience and say, oh, the S&P is going to fill its gap. So that's usually a lead off to say that we might break some hedge pressure and create some downside momentum. So then I would avoid the long setup.
All right, 2 more coin.
Coin, all right. So really, guys, the way I'm doing this, I'm just very practiced. I've done thousands of these a week. And this, the more you do it, the more you can just, I'm not using technical analysis. I'm not using any multi-time frame charts. I'm just looking at the liquidity map and seeing the pivots very quick. And I just have them all memorized how to act on it. So with a lot of practice, I mean, it's a good layer to risk management to see where volume will be. And what these hedge pressure pivots are just high volume pivots. It's where we predict where volume will be based on options. So I'm just trading where traders will be. And that's basically as simple as the analysis gets. So BLU coin, it's bull long up, all things up, 77.5 hedge pressure support, and also a gap and go situation. So if we would have gapped up and then traded above the open, I would have longed that to a resistance. Would have been a decent run. I think 90 is a decent target on coin from that 83 open. So I mean, it's looking like it's running very quick. And of course, you got that momentum still coming in crypto from this morning. I think it's going to move independently to the index. It's just kind of a meme this week to this crypto stuff. So it's got some good momentum. Anything below 77.5 creates a squeeze and downside. That's so far away. I don't think it's going to be there today. So that's up and probably still going up.
And the last one's going to be PLTR.
Okay, PLTR. All right, see what PLTR is doing. PLTR is very similar to SPY. You kind of open in that kind of mean reverting state, open balance, and it's kind of pressing to the upside. I think if the index starts pulling back, it's going to pull back. I wouldn't have taken any action off of this. I might have taken a long off of 16 if I got a decent one. And also gapping up and trading higher than the open is typically when I like to chase a stock. But then it's when you're in that mean reversion, like I said earlier, your liquidity pockets, markets don't like to create momentum. So when it pushes into the bull zone from the middle, I usually, wouldn't really chase that, which is the same mechanic why I got out of my SPY long to begin with. Just a quick scalp in there, because it does kind of want to tuck back into that liquid spot. So today, Palantir, I probably wouldn't have done anything. I definitely wouldn't have shorted it, and I would have probably bought at 16 if it dipped. What's up, Casey?
Hey, I'm out of my...
R2K is the Russell. Once big tech reports, you have a certainty of confirmation. I think so too, man. I really do think so. All right, hey John, what's up, bro? See you later, dude.
What Matt was just talking about, quick little run through, gives you some extra analysis using Rocket Scooter pretty quickly. If you want to check it out, we got a special going on right now, $19.99 for your first month. That's pinned at the top of the space, so if you want to check that out, click that link, get your first month for under 20 bucks. Not too shabby.
It's normally $200 a month for the full unlocked package and all your data feeds and everything. So it's 20 bucks just to check it out for a month. Everyone should check it out. And that ends on Halloween, so we got a week left on that. And really, it just covers your data feeds. You get the platform and everything else for free.
Love it, guys. Really fun lightning round there, and I like how you went Roblox first. The trade got taken, and it was a win. And while you were talking, the market's just been pumping as well.
Yeah, I just scaled more of Roblox here, pushing above.
Where is the ESDD band? So for you, it's in two places. Number one, if you watch the video, the first video in the boot camp goes over this. The very first video of the boot camp. DD bands are listed here under risk interval. You draw them yourself. You can type in whatever futures you want. It'll give you the bands. If you have a broker connection with EdgeClear, you can also get it automated on your chart. You don't have to draw it, just to save you a step.
Seems to be running, but it's kind of being held back a little bit. Tesla looking nice here, 4.5%. Minx, have you been taking anything else?
No, I mean, I've taken,
Lee, thank you so much for answering that for him. Lee said the same thing. So risk interval tab will have your DD bands.
all the moving averages.
As a matter of fact, we should rename that tab.
It's not a place for me to trade.
Can you rename?
Yeah, SPY is looking pretty potentially triple toppy here. Anne-Marie, have you been watching anything specific here?
I like to let the chart settle out for just a wee bit before I jump in, but I am seeing...
Okay, so I'm gonna change the risk interval tab to say the following.
And
I'm gonna change this to say RI
I love trading range, and so
DD.
that's what I'm going to sit with.
Is that okay? Would you guys like it to say that? Because a lot of people don't intuitively understand that DD is part of risk interval because they skip the video. So if I say DD, because that's the talking point, people hear it, y'all will know. Is that a better idea?
I think it's going to have a
I'm gonna change the name.
effect on the broad market in general, but that's
Okay.
really, I'm sort of waiting.
If y'all hate that, let me know.
And then, of course, next week,
I'll have that changed tonight.
numbers. A lot of people are just sitting around wondering what's going on, and so yeah, I'm in a wait and see pattern and intraday trading these ranges.
Sounds good. Sim, what do you think of this price action on SPY?
It's kind of all over the place, to be honest with you. This little back and forth that we're having right here, I mean, I was actually trying to go long, like I said earlier, around that 42.36 area, which I could have, but
No, resiliences are good across the board. Things are looking really solid. Like nothing's looking terrible yet.
They didn't look very strong. We just saw a huge amount of buyers come in all at once, but I still think we're...
I made like $300. I ain't nobody complaining about that.
See some downside or just shop around this range. For right now, I'm not gonna take anything.
Somebody said I looked good yesterday. Let me see if I can't find a picture of my outfit. Dude,
as you can see, just back and forth right
you're
here.
right. I was dressed to the nines.
So I'd rather get some confirmation before proceeding.
Let's see if I can find my.
Two SPY 422 puts here for today.
Let's see if I can find my.
We got a Angie man there on the 10, possibly one forming on the 15 with 3 minutes left.
I don't know if I have a picture.
Risky, so I'm sizing pretty small for it, but I always have to at least give it a go.
It's against your religion not to trade a hanging man knots.
I agree. So it's the 422 puts is what I grabbed for today.
Just see if I get a picture of me. Oh, all right, here we go.
Very nice. Blake, you been taking anything else?
For those of you that didn't see, I'm still kind of... Hold on.
Still looking to see if we can...
All right, check this out. Y'all want to see something cool? Let me show y'all some party pics. Hold on. Oh, that's my buddy's restaurant he opened. That's a killer octopus. Okay, let's see.
Not the type of morning to be over trading, that's for sure.
So we had dinner at this giant place, this huge restaurant. It's like a restaurant lounge. It was really cool. All my friends call me daddy. That's me being stupid. Matt's birthday bash. Matt had his own menu and everything. My friend is a part owner of that restaurant too, and so all my friends in town own like clubs and all my friends own like clubs and restaurants. That's what most of them do, or doctors or something. So this is, it's my menu when they put octopus on there for you. So I'm trying to see if I find like, there we go, there it is. Check it out. Look at that sexy guy right there, standing on the table, like that's what somebody said. I was dressed very well. Thank you very much.
Usually when I see back and forth here on like SPY and QQQ,
I got me some. Those are my fancy shoes. I never bring out the fancy shoes unless it's like a dinner time. Those are some suede Louboutins, baby. And I wear them only when I wear a tuxedo. I'm barely dressed up. Normally I just sit in gym clothes all day long. We had 2 different clubs and a giant house party, and there were 50-something people here at my on the octopus. Everybody knows octopus is my favorite foods. So we had fun. Giant table. The food was amazing. I mean, it was just crazy. And dancing mermaids. Them ankles, boy. I'm gonna tell you something. Let me tell you something about what I like to call man cleavage. All right. You show off some ankles. Oh, I mean the ladies go nuts when you show off your man cleavage. I'm gonna tell you something. I'm 42 now. Ugh. Boys, I'll give you a hint. I'll tell you something good. I have a style consultant to help me out with this. They tell you this: you wear like a tuxedo or a suit, and you show off some of your man cleavage down there. Whew, and ladies go crazy for that. Whew. That's how you look super dapper. And I don't know shit about fashion. I'm wearing these things. But the mermaids dancing with Poseidon, that's such a cool restaurant. Like, there's so much fun there. Fire breathers and stuff. I mean, we had a good time. And then like drumline came and played drums for the table. We had this whole corner area right by the DJ. So it's kind of fun. I got a pop-up card as well. Guest of the hour. So that was it. We had a great time. I normally do something. I go to everyone else's parties. I throw an epic bash once a year. This is my thing. And I throw a massive party once a year. Rocket Scooter launch party was the massive party last year, and there was 130 people in a house party. Last year we had a taco truck, food truck came by. We had an 8-piece band with a cello. We had catering from all kind of places, home cooked foods, all kind of stuff. It was nuts. And then we went to a club after, and everybody hung out, and it was all kind of friends, trading friends. People from the trading industry flew in from all over the place. So many people came from all over to come to the party. So all my friends from Spaces and Twitter and everything, they came in for it. It actually turned into a huge event. And then I don't do anything for a year. I like to throw like one bash once a year. I usually go to everyone else's parties though. Would I take multiple trades of hedge pressure for essays above 10? Yeah, you can. You can trade hedge pressure every time it touches. there's no rule as to how many times it should or shouldn't bounce. I usually just take the first trade and call it. I never take repeated trades. Other people do, and the risk and reward is well defined, and then it's always, you know, it's up to your discretion. I only just do one time though. The RIDD tab, when new contracts, the ones that removed are added back in. Can that be the case? Assets, wait. When new contracts, the ones I removed are added back in. Are you saving your layouts? This is why. Lee. You have to save your layout to save all of this. It's not auto saving for you. So that might be something worth adding, like an auto save layout feature. That's a good idea. What are we bumping into this level on ES? Anyone? Nothing right now. There's nothing it's bumping against. Let's double check that, like, Russell. A lot of times I look at the other indices, right? I like to see if any of the other indices are bumping into anything. Russell's not. QQ. Hard to say. I'm gonna get walls coming today for Qs for some odd reason. there's a. We went and looked at the data this morning, and they said that the data, nothing calculated for Q walls. It's very odd. So our data providers dropped the ball. When is risk interval for the next day for futures calculated? What time? Just after market close, Robert? Great question. We calculate it after futures close and before futures open, so sometime in that window. I think it's calculated in the middle, but it's calculated right before, between the 2 days. So CME Group usually publishes the margin requirement changes in the first earlier in the evening. So you'll get the risk interval updates daily now. We parse the CME website and get the data fresh from them. So once a day, you get automatic updates. How to get layouts to look like yours? If you want to pop out extra charts. One thing I want everybody to know is there's videos in the boot camp. I want everybody to get familiar with the boot camp, because in the platform features, we did a lot to give you guys some guidance on these things. Hold on one second. So platform help will have some videos on how to change your layout, how to do multi-charts and things like that. But I'll walk you through it as well. But you guys can always go through those, and they'll help you through a lot of the pieces of the platform. If you click this little pop-out button right here where my mouse is, right here, take a look really quick, Justin. This will pop out a chart. And then I just take that chart and drag it on here, and then I set it right there. This is the native platform when you first open it up, this right here. And then I just put 2 small charts to the left, just so I can eyeball VIX and eyeball the liquidity map all at the same time while I got my futures front and center in trading. It's the quickest and easiest way for me to be like where I want to be. I think it's just the pressure of opening in the middle. It tries to make its way back to the middle. And that's really, this resistance we're seeing here in SPY, no idea. 424 is having a hard time striking. It's hard to explain why.
So here's one thing I want to talk about with these hanging back candles. So
And resilience is cycling like this. So we're having some stocks breach their gap and drop down to the other side of that. So let's see if there's anything near half gap here. What do we got that's on the edge?
Sorry.
Gold.
The 10-minute,
F. Oh, F forward actually.
the wick ends at 422.56. I did trim there at 422, well, just under 423 there because we have.
But so Robert says, awesome, but it's on the previous day, not at 9:30 a.m. on the day. No, so risk interval is calculated once an evening. So it calculates based on the margin requirement of the product. And CME changes margin requirements every day for some things. Some things they don't change at all. Like S&P futures probably gets a margin requirement changed a few times a year. It's a rare case. Oil probably changes once a week, sometimes faster. So every day they publish something out that shows margin requirement changes. Every day we capture that and update the database. And every day we update the risk interval if it changes. So between 5 and 6 p.m. Eastern, you'll see the risk interval update somewhere in there. I have so many numbers flying in and out of my head, I can't remember the exact time I called it, but if I try to think about what I would have told them to do, is that they should calculate it at least 15 minutes after close and 45 minutes before open, just to have it done. But it's done in that hour and published to our database, therefore your platform in that hour. So when the futures market opens, you are up to date. What's the relationship between risk interval and the overnight dynamic hedge pressure? So think about this. Hedge pressure is calculating the gamma exposure of market makers. That's what it's doing. Of market makers of options, not of the underlying. So example is SPY. If I long SPY, this is just me. Let's do a trader. I long SPY. Here are the people. Trader. Long SPY. That's me. And I long to the house, right? So market maker is the one that had the short SPY to me, right? So far, so good. So the market maker shorted SPY with some calls. That's what creates the bull zone, is those calls. Sorry about that. Sorry about that. So if I'm a trader that long SPY and a dealer shorted SPY to me and bought calls to hedge, it's the dealer of the options that we're talking about when we talk about hedge pressure. They're the ones that sold the calls to this triangle, the three of us. So the dealer calls from the equity side of things create the bull and bear zones because it shows where the traders are trading against the house. Hedge pressure is looking at the sold options as insurance. So it's the gamma exposure of the people that sold the options. Right? So hedge pressure is looking at where options that belong to neutral trades are at maximum gamma. So it's a forced order flow of neutralization. That's what the hedge pressure does. Now what dynamic hedge pressure does overnight is as follows. Opera releases the open interest once a day. Okay. Because at the end of the day, firms report their options positions to Opera, okay? And Opera compiles that data, and they spin out that open interest to us overnight, to anybody in the enterprise data feeds from them. They send out once a day. And then nobody knows the visibility of positional data until that's reported at the end of the day. So not even the exchange knows how many options are in existence, period. No one knows that information. So because open interest is never known when the market is open, one must guess until Opera reports. So at any time Opera reports overnight, any time before that, we calculate our dynamic hedge pressure right at the end of the day. We try to guess what the open interest will be based on aggregating what our model thinks open interest should be. And we come up with a range. Every option that exists for SPY, for instance, every single option, every strike, every expiration, we estimate what the OI minimum is and OI maximum is based on what our algorithm is determining the possibilities of those should be. And then we run the hedge pressure calculation with a table of OI mins and max, which is why we get a hedge pressure min and hedge pressure max. Because the best you can do, you don't have a real-time open interest model. You don't know how many options exist until Opera tells you. And as trading starts at 9:30 in the morning and goes on, options start trading at 9:30, which is where your visibility changes. So hedge pressure and walls theoretically can move around. But we found that they're static, anecdotally, they're static until the market gets random at 2 o'clock Eastern. So in theory, as open interest changes, hedge pressure can shift around, and so can zones and walls, because options change, but you'll never be able to know what they change to, because nobody reports their position till the end of the day. So the dynamic portion of that is a dynamic open interest model that tries to forecast what the open interest possibilities are, the high and low possibility, and then do a hedge pressure calculation off of the high and low, completely unrelated to risk interval. So it's using the options in the underlying. So risk interval is a futures thing, hedge pressure is an equities thing, so they're not related. But we have a real-time open interest model that tracks all the trades throughout the day and aggregates them and tries to guess what each option OI should be at the end of the day and what ranges. So if you know the possibilities of all the ranges, you know the possible range of where hedge pressure maximum would be based on that risk. Yeah. So dynamics, one of my favorite. Now it has some pretty good dynamic hedge pressure, some very good side effects. Is that range that it calculates in futures? Because dynamic hedge pressure calculates dynamic hedge pressure in equities, and then we convert it to futures. That's where the connection is. So we take what the S&P value is at that point in time, the futures value, and we just cross multiply and convert the hedge pressure value to two futures values. And you will notice that they are rock solid pivots. And it bounces off of them, bounces from them. If you're below the two estimates, like today we were, then it's kind of bearish setup. If you're above the two estimates, it's bullish setup. They're very accurate at pivots overnight. Would I make a trade at dynamic overnight? If I was trading overnight, yes, but I don't trade overnight. Is it good to trade overnight? If you are in Europe or Asia and you want to trade overnight US hours, then that's great. Those are some great tools for that. But if you're like me and you have a good work-life balance, I'm going to make my 10 or 15, 20 points in the S&P in an hour's worth of time in the morning rather than 8 hours overnight. There's no reason for me to not be having fun, working out, seeing my family, reading books, making a trading platform, getting high, whatever I want to do in the overnight session rather than try to scrape another $100 to my net worth. So as a trader, I don't usually trade overnight because I make my trades in the morning. But it doesn't mean trading overnight's bad. It's just the lesser of two evils is that I want to be in the market as little as possible. But overnight dynamics are fantastic. We actually created that. So at the end of the market day, you want to know if you're long the market. Let's say that you're swinging some stock and you're swinging the index and you're long at the end of the day, or whatever, I'm long and I'm going to hold for weeks at a time. And then you wake up and dynamic hedge pressure is here and you're trading below dynamic on the future session. Immediately you know, crap, I might be in for a headache with my swing position. So you can say that if you need to hedge your long position, you've got some places to actually short some futures overnight, to hedge the long you have, which might be in a dangerous territory. So it's insight into once the futures market opens for the next session and other markets around the globe are trading, should you need to hedge your long, say you were long at the end of the day and you didn't buy puts and you're just naked long, and then all of a sudden you're below these hedge pressures. Your brain now goes, oh, you know what? I probably should hedge. Let me neutralize that long with the short in futures. Are they as reliable as daily hedge pressure? They are 100% reliable in showing what it is, because we found that anecdotally, as we've been watching this, they pivot very well. It doesn't guess what hedge pressure will be exactly, but the two pivots that are presented are rock solid pivots, which is what you want. anytime you have a pivot, you want to ask yourself two questions. Does the price actually change at it sometimes? And when you get to there, is a volume spike? And both of those things happen on dynamic pressures. We found out that the model we have that guesses the range is exactly what everyone else in the world does because it's the best you can do. You'll never know exactly, so you guess the range. So what we've noticed is that the reason they're actionable is that's the best anyone can do. Therefore, people are hedged in the high possibility and low possibility, and we just kind of sniffed that out. So, reliable meaning that can we make a solid liquidity map off of it? We don't create like a bull long up type liquidity map. The rules are a little simpler and they're a little looser. So you have a dynamic range, and we don't present the range for monthly. We just present what the algorithm thinks it should be. So the algorithm actually comes up with three answers. The real-time open interest model calculates what it thinks the real-time open interest is and gives you a hedge pressure in a monthly. We present the high and low range as the real one is somewhere in the middle. Hold on, let's call me in. The estimate's somewhere in the middle of the high and low. We present the high and low range because it's more actionable. The actual estimate is an estimate. It's based on a model, so it's not exact, right? The model is a model. It's our best guess at what OI should be. But the min and max are exact. It's the maximum OI can be, and the minimum OI can be. You can calculate the max and min. If the previous day's open interest and the volume of the trading day, OI plus volume is max. OI minus volume is min. If you have 10,000 contracts and there's 1,000 traded for the day, then your min is 9,000 to 11,000. It can't be any more or less than that. If you see volume is 1,000, right? And OI was 10,000 the previous day, and 1,000 were traded, either 1,000 were created or 1,000 were destroyed, or some mix of the middle. So you can have the min and max are exact. So because min and max are exact, and the OI dynamic, which tries to calculate exactly what it is, maybe say like 94.23, because we try to actually aggregate and get an estimate, we found that the min and max are actionable and exact. That's why I present those, Robert. Is that my own calculation? 100%. Everything here I invented with no inspiration from anybody. Or no borrowing, no copying, nothing. These original ideas here. Our team built all of this from scratch. This is our brainstorming theory crafting session. We built off nobody's shoulders. Inspired by no competitors. Nobody has a calculation remotely similar to this, at least in retail. I'm sure everybody, institutional side, does their best to try to guess the OI. If you have real-time OI, it's a holy grail of trading. You have the real-time risk of everyone's positions and the real-time visibility of the insurance landscape. You are a god in trading. You'll know everything at all times. So that'd be great to know the real-time OI. So it is a holy grail to search for an accurate model that tries to guess it. But the dynamic hedge pressure estimate in the middle is an estimate. The min and max are absolute. And we know that the rules are as follows. If you open up above the max, then those two are bounce points for bull trades. Those are your actionable points. This one goes to DD upper, this one trades to the band. If you open below the min, this one goes to DD lower. These are overnight trade plans. And this one goes to min. If you open in the middle, it tends to bounce in the middle. Since monthly hedge, we don't treat it as actionable as much on the estimate side. It's more of a long-term pivot. We actually report the actual dynamic monthly. We don't report the min and max there, just to make it a little less confusing. And that's more of just like an overnight gauge of, okay, we're below monthly hedge pressure. It's still bearish in the long haul. I'm just gonna run out of memory here.
Instead of just waiting for the actual break itself. So
There we go.
what I mean by that is there's something called a filter.
Yeah, we're, despite the theatrics and me talking about man cleavage and bottle service, I am a mathematician by heart. I just party every once in a while. We're very serious mathematicians here, so definitely love theory crafting, data mining, coding, coming up with new ideas, and being original in our approach to the market. This is something we take pride in. Is there a section for overnight trade plan on Discord? There should be.
Really looking for a hold over 424 and a reclaim and a hold over 424. And if we had gotten there during that time, then I would have
There should be a video on futures dynamic.
Assuming that the bids were gonna hold, and I saw a good amount of volume. Now that didn't
We need a better video. I thought I had one.
before. But it really
This is all the future stuff we have. Let me. There is a video here,
taking the early entry. And a lot of
but the overnight trade plan is pretty simple. The bot actually just tells you.
more of it, we're gonna take off to the upside. But that comes with that patience, that discipline that I was talking about, is essentially knowing, okay, well that's my rule. If my rule is to break over to 424,
I thought I used to have a futures trading session here, but I since scrapped it. Let me see if I put it in the archive.
risk management and setting up your rules and sticking to them. This is one example right here. If you're a rule-based trader, which I hope
There's not one video, but let me see if it's an extra. Hold on.
plan set out in front of you, and you're not following into a team. These are the days right here where you're looking back like, damn, I got absolutely clobbered on that because I could have just waited those 15 cents for it to break or, and then look at that pullback in a balance entry. But I went ahead and I took it early, and that 15 cents now cost me. So like days like this will really, really test you when it comes to a patience standpoint. And
Right here.
waiting for something to break in the correct way.
That's the
But it
video.
also gives you
I want to make a different one though. That's just more modern for the platform because now the stuff is here in the bot. I don't know if that goes over all the pieces of it. That's more of a summary video, but I'll actually film a different one. But that's basically it. That's basically it, Robert. I mean, it's as simple as this. You just write this down because there's no more complexity to it. If you open above the two estimates, you pivot to DD, or if it falls through here, there's another scalp trade to there. If you open below, it's a pivot to DD bottom, or if it breaks, there's a scalp to there. And your stops are on the other side of the band if it goes through. For monthly, if you open above monthly, you just say to yourself, it's greater bull sentiment. If you open below monthly, it's greater bear sentiment. So in general, you use the combination of the two. These are my actionable pivots, and this is my feeling of the market. So today, in general, like last night, we had, I think it was like, I think 60, 65 and 55, something like that. So let's show how you would have done last night. So 56 and 61 was last night. So let's show you what 56 and 61 look like. So the dynamic monthly was 61 last night. So overnight, that's what you have. So let's go to the overnight. Let's start at the beginning. So I'm looking at the bot and channel 42.61 and a quarter. 42.61 and a quarter is literally right there. And it's calculated right here. That's it. Look how clean that was, right? That's literally where it went and turned around. 41.61.25 is here. And 41.56.25 is here. Or sorry, 42.56.25 is here. This is what we got. So as you see, at the end of the day, the market traded up and pivoted here. That was, I say, the pivot goes to lower DD band. And if you break through, it goes from here to there, which was here to there. Pretty neat, right? So last night I see the setup look just like this, and I go, we're going to have resistances from there and there. And it just did random stuff. And then it hit here and came through. Remember what I said earlier. If you open below, you bounce there to DD, or if it trickles through, you trade from there to there. And there's the there to there. Pretty cool, right? We found it's very actionable. And in the greater bear sentiment of monthly hedge pressure is that we're going to, usually when you hit monthly hedge pressure from the bottom, it usually pivots lower. And look, when European markets open, you did have that pivot lower. Isn't that cool, Robert? So even our dynamic model that's an estimate has turned out to be highly actionable. As the years went by, people were like, we were using it as a gauge to where should I short the market just so I know that I'm wrong. Like if I know that the two hedge pressures are likely here and here, or the hedge pressures between those two, and then I know that my monthly is there, and say at the end of the day, I long the market at the end of the day, and I open up down here and I go, shit, we're going to hit that and reject. Crap. So maybe I should short the market or short off of there to hedge to balance it out. You tried trading on the NQ level and took some heat before it came in. And overnight, it's just, like I said, it's an estimate. So the goal is that you do the following. Risk management is as follows. Anytime you trade off of a pivot, in futures, you use one strike distance as a stop. I think the one strike distance on QQQ is 1 point. So I think that translates to 40-something points on NASDAQ. Using S&P as a guide, it's 1 point on SPY or 10 points the S&P. So if I'm trading here off of there, I need to have a 10-point stop. I need to have more than 10 points of reward. So NASDAQ, you're going to utilize one strike distance of Qs, which I think is, like I think they said 40-something points. Does that make sense? So you will take some heat sometimes, but if you trade between the two of them, let's talk about NASDAQ real quick. Let me show you how I would trade it if I do trade. Let's just, again, in the overnight, it's the best you can do. Here, let's see NASDAQ real quick. And NASDAQ was 14,788. Isn't it like 40 something points? I need to do the math really quick. 14,788, which is about right here in the middle. They're all there. So all three estimates are there. It's about a 40 point, I think it's, does anybody know off the top of your head what the conversion is for 1Q? I think it's 40.
Yeah, I think one of the biggest things is what Sim said earlier, and this is truly something that
How much is one strike? How much is 1 point on Q in NASDAQ futures? You might have that. $41, yeah, something like that. So when you go to like the dynamic here, it's 788 plus 41 is 829 or 830, right? Which is literally here. You give it one strike of flexibility, which is literally exactly where you would have stopped if you were to take the trade. And both the estimates were here. So I would see this and say, okay, you know, it's trickling up, it's probably going to reject here. And yeah, NASDAQ overshot a little bit inside of the, what we call the buffer range, which is your overshooting range. And you overshoot pivots a lot in the environment that VIX is above triple B. And Robert, you got to watch this video here. Anytime VIX is in contango above triple B, we take this stance of overshooting pivots. You guys remember this, everybody? In this environment, for the entirety of the month, this calculation is done once a month in VIX futures. This is triple B. It's one of the highest ranking calculations we have. This is defined by overshooting pivots. So you will know that you can at most take a strike of heat. You have to be ready for that before you stop. And if you go to our trading reference guide, I don't know if you're familiar with that, or actually if you go to the overview, at the top of the boot camp, you will see that the triple B ranking 6th on the list in priority. If you're trading in this vicinity, you're going to have loose pivots and overshoots. We expect that strike distance. What video is that? Like, okay, everyone start over with your, thank you, Alex, thank you, Ty. Everyone start over with the boot camp. We're refilming all the videos. Start at the overview and realize that each one of these things on this list has an explanation. So I want you to make sure, especially Robert, to go through it, at least copy this list and have it accessible to you. Everything at number 1 outranks something at number 2, outranks something at number 3. If you have multiple things you're looking at, something above it outranks it in your decision making. This tells you the state of volatility in the market. It has to do with predicting future volatility and pricing it in. It is an effect of contango and backwardation. If VIX is above this level, you're going to have loose pivots and overshoots. If you're below it, razor sharp pivots. It's a dynamic shift over the course of the month. And as you see right now, why a lot of Rocket Security traders are very cautious right now and taking quick trades and getting out of the way is because we are in this environment where there's contango and we haven't collapsed below the line. When you collapse below the line, let me show you what it does. Oh, crap, I have to custom. Let me show you edits. I swear I thought I had the history on here. Oh, here it is. History of like multiple months. Here's an example of the previous month. Okay. This is where that level was here. We gapped up and traded above it. It's still overshoot pivot, overshoot pivot, overshoot pivot. And then finally on this Monday, we collapsed below it. And then you see how volatility is just nice and smooth and it ebbs and flows rather than chopping all over the place. The idea that volatility chops all over the place when in contango and above this level, and volatility is nice and tight as it moves down here, Robert, you see that? Is a defining shift in what this actually is supposed to represent. The contango effect being priced in the futures actually can predict the behavior of the market. The volatility itself, the VVIX, which is the volatility of the VIX, the V's the VIX itself experiences are big and big and big and big and big, 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 those daily ranges. And when you get below here, do you see how it's very small? Very small. It's not like big changes in volatility very quick. Look how tight it moves. Can you see the difference, Robert? Overshoot. Rock solid. Yeah, so when you're down in here, you can afford tighter stops. Up in here, we say you wanna maintain at least one strike distance of stop. So about 41 points is your leeway for overshooting on NASDAQ and about 10 points in the S&P. So if I'm going to hit a level against NASDAQ with a 41 point stop, I'm not just going to short right there. I'm going to short here and short in between there to try to build a position inside of that fluff zone where it's just bouncing around and definitively stop everything there. To bet on some overshoot that's allowed because we tell you to expect the overshoot. Because the market, again, it's an estimate model and it's dynamic and it changes. And so in that environment, you're going to expect your pivot. Now that you know everything, and again, I'll make another video to kind of recap this. You had exactly like almost 38, 39 points and your stop would have been there. So if I were to do anything by like shorting, oops, sorry. If I were to do anything like, my stop would have been right up here. If I would have shorted here, I would have also built shorts up to my stop just to get my cost basis in there and just kicked out of all of it. So I take a smaller position and chop it into pieces to manipulate my cost basis rather than just shorting off of the pivot to go, because we tell you to expect overshoots. And Triple B is the most important thing, or VIX is the most important thing of any futures trader's diet, right? You must be fully aware of understanding how the volatility affects the pricing of the stock market and futures markets to trade the index products. So a lot of our tools characterize different environments. Our number one risk management tool is a volatility runaway. VIX is the number one circuit breaker for my trading to pull things out. So VIX is here, VIX is here, VIX is here. VIX is here. Do you see how 4 of our caution rules come out of VIX? Or 2 of our caution rules and 2 of our irrational rules come out of VIX. This is VIX catalyzing itself into a a massive event called volatility runaway. VIX can catalyze itself to create a market collapse. We know that when VIX bounces and hedges itself higher, that the market spontaneously becomes more volatile, trim out some positions. We know that this is a longer-term sentiment of the market that can predict if your pivots are solid or sharp. Hedge pressure pivots are not the most solid either in this environment, or multiple bounces. So, as you see, this is characteristic of triple B. So let me give you a couple examples of triple B. Multiple bounces before you take off. Hugging and playing at it before you take off. That's scarier than triple B. It does that. So you give yourself some leeway and some flexibility. If you're in a decaying VIX environment over the course of the month, and it goes from monthly VIX expiration to monthly VIX expiration options. If you're below triple B, you know very quickly if you're right or wrong. The market will bounce very quick. Or if it overshoots, it's like one quick win and goes. If it's fighting there in this environment, you get out of the way. There should be no fight, no overshoot. That's how we take it. So greater than triple B, it's like multiple bounces before it goes off, or hugging before it goes off, or overshooting and then bouncing and going. Greater than triple B, callable bear breakpoint. It's just a name we came up with. When I hit hedge pressure, I'll take a smaller trade and I'll add in up to my stop to get my cost basis a little bit lower. Would I consider VXN for NASDAQ? You could. We don't, because we don't. The NASDAQ more often than anything is mirrored by the S&P. NASDAQ will deviate on its own sometimes, which we should create tools for the NASDAQ. But there is no futures for that. Are there? Are there VIX NASDAQ futures? Or options? Like, is there an ETF that we can do a liquidity map on VIX like we do with UVXY for NASDAQ? Are there VIX NASDAQ futures? You can do the same. You can do triple B on NASDAQ futures. VXN. If there are futures or options for any of these products, you can do the same calculation for NASDAQ. But we just use the one for S&P 500 to represent all of it. Because the S&P being a diversified index is going to show the index itself. NASDAQ being like a limited index for certain sectors, we try not to like put a lot of stock into letting the NASDAQ tell us what's going to happen. But in theory, you could, Robert. Which, if that's available, we should make that. It's like NASDAQ has its own resilience, and the S&P is the most important, the more important of the two. Where can you find the calculation for the DD band? Right here. You don't need the calculation. We give it to you, Mark. You need to calculate it anymore. Come here and go to the risk interval tab at the bottom of the platform, and we just tell you what they are. All right, guys, I'm bail out of here. We'll do a Zoom call again right at the middle of the day. This is a quick $300, whatever. Took a long, got on the right side of the trade. Looks like the volatility issues we were experiencing got squashed. So things are looking good now. So I'm not too scared of the market. I guess where we are now. And so things are looking a little okay. I'm liking it. At least for now, looks like the problems are solved. We still have triple B to worry about. When we bounce there, the market could turn around and pivot heavily. Monthly maps have stabilized. You like what you experienced here, you like the platform, we really wish you guys come support us further. Join the program. Go to our main site at the bottom right. Spooktacular is a $20 membership per month. Cancel anytime, but at least for $20, you'll learn everything it is we teach here. Learn so much about the marketing. Play at the platform for a month. See if you like it. And you add some risk management to your diet. And trust me when I say, I live trade with Rocket Scooter and nothing else. I mean, I'm on like a 10-day streak or something right now because I'm utilizing nothing but my risk management, my techniques. We teach you how I trade the way I trade. Ashton teaches you the way how he trades, and you guys hopefully can learn something. It's only $20 for a month. Can't lose that. Can't lose with $20, right? Just for a month, you can check it out. We love y'all. Thanks for tuning in. Thanks for supporting us, and we will see y'all